So the combination of ongoing fiscal dominance is pretty good for Bitcoin. Um, Tariffs or anything that could reduce liquidity. So tariffs, a dollar spike, that's around the margins, negative for Bitcoin.
Bitcoin continues to dominate the financial conversation, proving itself as a key player in the global economy. As its adoption grows and its influence expands, understanding the macroeconomic forces shaping its future has never been more critical. That's where Lyn Alden comes in. A leading macro analyst, investment strategist, and the author of Broken Money, Lyn brings a wealth of knowledge to the table. In this video, she'll break down the impact of fiscal policy on inflation, the challenges facing the Federal Reserve under fiscal dominance, and the role of tariffs in today's economic landscape. If you're ready to gain valuable insights into Bitcoin and the forces shaping its path forward, you're in the right place. Don't forget to subscribe, like this video, and hit the notification bell so you never miss out. Let's get started.
Debt ceiling can affect liquidity. And as I covered in a report with Sam Callahan and other work, Bitcoin price actions historically pretty correlated with liquidity. It's not the only correlation, but it's one of the more sizable inputs to Bitcoin price in the intermediate term. So the combination of ongoing fiscal dominance is pretty good for Bitcoin. Tariffs or anything that could reduce liquidity. So tariffs, a dollar spike, that's around the margins, negative for Bitcoin. So I would expect probably some of those events happen this year. They're probably not sustained for very long. Kind of negative liquidity is not really, it's hard to sustain for long periods of time given how levered the system is. The policy mix is probably neutral to bullish for Bitcoin. And then when I look at certain on-chain things, like really basic stuff like market value relative to cost basis, or the HODL wave, like what percentage of coins haven't moved in a year and how many of them sold into the bull market, because bull markets are characterized by the market value getting way ahead of the cost basis, and are characterized by some of the older coins that are up 5, 10, 20x selling into the new buyers. So I look at those types of indicators to see, are we stretched here? And both of those still look kind of mid-cycle. Now, cycle structure could change, so there's no guarantee, but most signs to me still point up. 12 months, anything can happen, but if I say 12, 18, 24 months, I'm still pretty bullish on Bitcoin at these levels. We could. I think the problem is that as numbers get bigger, it takes more and more to move the needle.
Yeah.
But the upside of that is it's a more liquid network. So Bitcoin in 2025 is more liquid than Bitcoin in 2017. I think a lot of that money is pretty sticky. So I would generally expect, drawdowns to be controlled. But then upside, if you shoot upward really quickly, you do get a lot of selling pressure from older holders, like people that have been holding longer than are up significantly, either rebalancing or upgrading their house, like they're the quote unquote buying the Lambo. You do see some of that cycle. So I think it is healthier not to go straight up and to kind of go over time. So it could certainly prolong the cycle in exchange for less in any given 6-month period of going vertical. I think you could get a super cycle in time, but it probably would come at the expense of magnitude in any given unit of time. So I certainly think I would give some credence to the idea that market structure could change and future cycles might not look the same shape as prior cycles. But if we define a super cycle as just up only and explosive, I would generally be disinclined to expect that, because the problem is that any sort of strong upward move attracts leverage and attracts euphoria, and that's what causes some of those major pullbacks. And if it gets excessive enough, that's what can cause a multi-year pullback. So to the extent that you prolong having a multi-year pullback, it's partially probably because you never got super euphoric or leverage to begin with. It was probably meant that the price action was good but not stellar. So that really long gold bull market was a bigger market and moving at a level that was significant, but not like what Bitcoin can do in a year. So you could have a cycle like that, but you also get the downsides of the cycle like that, which is that you get more gold like moves. Like I'd have more confidence in that at the top. So for example, right now, like I mentioned, those on-chain indicators are not euphoric. So if
Yeah.
we said, okay, if we're gonna have a drawdown from here, I would expect it not to be huge because the highs aren't as kind of overstretched. Now, if we get something crazy like sovereign FOMO and we hit all those same extreme sentiment, then maybe we do get another 80% drawdown. So I'd have to answer that based on indicators at the time.
Hmm.
But on average, I expect that as cycles get bigger, they probably get less explosive to the downside and the upside because there's more liquidity, more spread out. There's less ability for one actor to kind of mess up the whole thing, unless you're like a sovereign entity, like a massive sovereign entity. So like that kind of smooths things out a little bit as my base case. I think yes, some of them might not have the stones. Some of them might not structure their debt as well as MicroStrategy structured it. So even if they have the stones, they might just not have the choice. In addition, um, like kind of like how in the prior cycle, when GBTC's premium went away, that kind of marked the top roughly. Like
Hmm.
after that, that was early 2020. It started chopping kind of sideways for a while. So that didn't blow things up right away, but it just kind of like it took away this kind of arbitrage demand for Bitcoin. And you could see a similar thing, which is right now MicroStrategy is a huge buyer. They have a premium, so they're going to keep buying. And eventually, if they exhaust their market for a cycle, so it might not be permanently. They previously exhausted their market. Then now it's obviously a lot more demand, but they could for a period of time exhaust their market through no fault of their own. Just the market only is so big, and then they go back to not buying anymore because they don't have a premium that allows them to keep issuing securities. And then you could remove that marginal buying source, and then enter kind of a longer bear market. Maybe it's not explosive to the downside, but that can trigger kind of weakness. And if there are over levered entities out there, um, that's how they can kind of send it down. So we have to kind of see what the market looks like in late 2025 or mid 2026. We can have this discussion again and see, okay, by metrics, how euphoric does this look? Right now, I think the industry is pretty healthy. No major signs of euphoria. Occasionally, you get little brief periods of slight euphoria, but nothing that looks kind of like a multi-year drawdown to me. So, and I think that'd be healthier to see a little bit less boom bust and a little bit more grinding higher over years would be ideal. I don't know if we'll get that, but I think that's ideal.